Morning. So, um, market continues to make new highs. Um, we had a slight sell-off on Friday, rallied back strong. Um, this is a closing high on the SPX. You just can't see it. This is the SPY dividend. So here's the SPX, no dividend adjustment. So. You can see 2420 had support there last week and new closing high. So that's that. So getting back to the SPY. So this should correct itself with the levels over the next few days in terms of the dividend. So looking at yesterday's price action, after the initial pop, it did have some trouble here at 244.5. Pulled back 40 cents, made a new high. And this is a normal kind of reversal pattern that didn't reverse. You have the uptrend, meets the new high, then a couple of red bars, but it caught a bid again and closed strong. So that's kind of impressive. Normally you make the new high comes down hard like this. Usually you don't make a new high again. This morning, it's right here at support from yesterday. Below that, there's really not much. You're looking at where the move started from yesterday morning, 243.50, 243.60. The thing you want to look for in terms of strength is this area right here, where it failed on the open, made the new high, closed below, and then failed here in the pre-market, or 4 a.m. against the London Open. IWM, we've been talking about the 141 for the last week or so. Use that as an inflection. Market clearly was doing that. It failed there in the morning, got back above it, got below it, closed right above it, below it this morning. Let's watch 140.50 to 140.60. See if the buyers step up now. Here and here. See if they can step up to yesterday's morning area. And then if they do, and it gets above 140.130, and you get a close up here, then you would look for the new high. All right, not much in play. LEN. So I feel like I say this pretty much every time we talk about these home builders that have good earning. The numbers look ridiculously good. It always seems like we get these good numbers, then they gap up and they get sold. So they had this big run up in 2012 and 13, and then since then, it did make new highs, but it's just been this massive consolidation area. We have this high here from back in 2015, which we still haven't breached. This is kind of where we are right now in the pre-market. So why would this not hold a large gap up on really good earnings? Well, let's see where was it in January. It's a $42 stock. It's $54, 25–30% higher. And that's the only reason for not to hold this gap. Numbers were really impressive. So. It's 54 is an inflection on this. It's done 60,000 shares in the pre-market. They started selling right away. I feel like they do this every time. So if someone started selling at 8 o'clock at 55.5, now down to 54. I feel like it's probably a buy right here at 54. The last couple of times I've done that in the home builders, they kept on going before they bounced. So let's just say if it drops 54 here in the pre-market or when the market opens, within 10 minutes you want to see it back above 54. And then if it's really going to close at the high today, it's got to get above this kind of where it's held in the pre-market sellers, 54.5. But after the open, pops down, gets back above 54, consolidates, and then breaks above 54.50 and holds. And look for that to possibly close at the high of the day. Tesla. So Tesla, they're close to closing a deal to do a plant in China. They avoid a 25% import tariff. By doing that, China, it's just going to be such a big market over the next 10, 15 years. It wouldn't surprise me if it becomes the majority of their business. So very in play. It's done over 500,000 shares already. Let's take a look at the daily. Again, this is one we were all over from the breakout above 280 at the beginning of April, and that was, we covered this kind of rare gap and go longer term breakout in the Wayne Trader program, which some of you may have been part of. This is why, $1,000 risked on options on this breakout probably is over $50,000 now for every 1,000 you risked on options, just rolling it up to higher prices. So this sort of trade can kind of make your year. It's still in a strong uptrend, consolidated for 6 weeks, then broke out above 325. Run up here. Now it's showing some, about $100 above the breakout, $9,500. It's having some issues, which is fine. Let's look at the 30-minute. Let's go look at the 2-week. So here's the last couple of weeks. It gapped up. It had this nice trend day from 365 gap up to 376. Came back down, tested this pullback support from the day that it trended higher. Pretty clean there. Tested it again yesterday, up in the after hours on the announcement. Takes up the high. People are selling it, and it's back below. So I'd be very careful about entering short positions up in this area here. Excuse me, long positions. Short positions are okay, even though our focus for the most part is on the long side, longer term. So far the low here in the pre-market was this 372. This is kind of the buy zone right here, 372. So people are waiting at kind of the top of it. 370 is a little bit of a better buy based on the last few days price action. So there's something possible. And then obviously 368 is the drop dead price right here. So let's zoom in. See, we got aggressive here below 380. Really good volume to 372. There's probably 50 cents to $1 risk right here. It's already bounced $4. Now we'll look to see if it makes a lower high somewhere in here. Comes in, we either get the retest, 73 to 72, and then we get back above 74 and we make the play back up to 380. Or if it comes in here and it's consolidating and then breaks to the downside, we look for the break to 370, worst case 368, I think. I don't think it'll go below 360. I don't see any reason why it would go below 368 today. Although, that would be flat on the day, obviously. That's right, it closed right at that support. And again, it's for more experienced traders. You're going to have to risk a minimum of 50 cents, sometimes $1 or $1.50. All right, EQT. So, this has been happening over and over again in June where we've kind of picked really good prices. Probably why I've only had one negative day this month trading AM ideas from the AM idea sheet. I got to go back and check and see what happened that day, see what exactly that was. But we had 53 as our ultimate support. It held here, held a little bit higher. It ended up bouncing back to 55, which was on the sheet as well, and then it failed, and it almost came back down to 53. So again, a little bit of risk at the 53 support for $1 to $2 of upside was our number one idea. It worked quite well. If you look at it from the standpoint of the failure on the open at 56, and you're looking for some sort of a downtrend, this is kind of, you could say, sellers in control until you get a consolidation above 54.5. Kind of pretty bad that it actually came all the way back down to below 53. So we'll see this morning. If you notice it below, let's say 53.60, and someone's selling it, watch to see if it takes out that 53 support that we highlighted. Let's check the daily quickly. Okay, so that's why we have 53 support. This is the pivot low from on the daily. I mean, there's really nothing there until 50. So JD. So JD, nothing really happened on this. We had it had been really weak, and so I was skeptical of the gap up. So I shorted this 40 to kind of 40-20 resistance. It held, but it never rolled over. So I'm still short some. I covered my risk in the first down move. So it never held below the morning low. So it was just really a tight consolidation. So either, you know, break either direction, break here or break here, you play that. There, CLVS. CLVS, we didn't quite nail the low there. I think I bought, and then it popped a couple of dollars. I actually don't remember maybe I got stopped out of this one. So we talked about 90. There'd be some potential profit taking. We'd look at 85 based on the pre-market. It overshot that 85. And if you gave it a full dollar risk there, you never got stopped. It did a retest and then reversed back up to 90. We had 90 as resistance. I mean, my bigger takeaway from this is that it held a really large gap, and as long as it's being bought above $85, $86 a share, you could be looking at it going to 95, 100 pretty soon. But it's you know, it's whippy and a risky stock. NVIDIA, which I think Aaron maybe asked about this in the chat, and we kind of highlighted in the morning meeting that 154 to 155 that it had to hold above to be a good long, and it was textbook really. And so when you get the clean break above 54, 55 in the open, what you'd like to see is a pullback, at least the top of the area. You got that after it went to 57. It pulled it back to 55. So if you bought it here with 50 cents of risk, it closed strong, so you're still in it. And you're rewarded with a gap up this morning. So, you know, hopping up into this area here, you would take sales, and then you would see. If it fails here, it comes back down to 58, consolidates and breaks to the downside, maybe you'd have a trailing stop below 57 and a quarter, something like that. That's it. So, yep, okay. As always, be patient and good luck.
Hope you enjoyed that video. You can actually watch that video if you're subscribed to our Trader 90 before the market even opens. What stocks are in play? What levels in those stocks are important? And how we might go about attacking that stock. That's Steve Spencer, 20-year veteran trader, laying it out there every morning before the market even opens. A really, really powerful tool to start your session off on the right foot. So right now we're offering a trial that you can take advantage of to access this meeting and other meetings throughout the day. We have a meeting at 11 a.m. Eastern where you can sit down with Mike Bellafiore and listen to him talk about what's going on during the morning session, what stocks were in play, what the best trade opportunities were, as well as maybe some things that we're looking at heading into the afternoon session. So I really encourage you to take advantage of that trial.